everyone, my name is Lindsay Sullivan and I am the Education Manager for the National Demolition Association and your moderator for today's presentation. I'd like to welcome you to today's webinar, Demolition Foundation's webinar series, Job Cost Tracking, presented by Greg Menen. We do encourage you to submit questions during the presentation. You can do so by selecting the Q&A tab on your control panel, which is located at the bottom of your screen. Simply type a question and hit send. As time permits, we will answer questions from the audience at the end of the presentation. You'll also be able to see questions that other attendees have submitted, and if you click the thumbs up button within the Q&A box, you'll be able to vote for that question. Once we get to the Q&A session, we will answer the questions with the most votes first. We're also excited to have some additional participation in today's webinar when we get to some of our discussion questions. As a default, all of our attendees are muted when you sign in so that there's no sound that interrupts the presentation. When we get to those discussion questions, if you'd like to speak, please use the raise your hand button in the Zoom platform and we'll be able to call on you and unmute your line. To practice, can everyone please raise your hand now so that we know how to do it? You can find the raise hand button within the Zoom platform. I already see over half of you have your hand raised, so it looks like everyone is well acquainted with how to do the hand raise. So thank you. If you don't see it, it's within your participants icon as well. Finally, we're also excited to be utilizing some live polls in today's session. So be on the lookout for those to pop up on your screen about halfway through the presentation. And now I'll turn it over to our facilitator, Greg Menen. Welcome, Greg.
Thanks, Lindsay. I appreciate it. Putting my phone on mute so I don't get any calls during the course. This is an interesting time, and I'm glad that we can at least try and put some of these items together. Hopefully you're aware that we have a set of courses. This is one of the four. And so we've tried to offer this to everybody and taken the time. This is going to be a kind of a condensed version, and hopefully we can present you with some information to think about and utilize in the future portions of your work. And we're excited to be able to bring it to you. Hopefully we can try and make this a little bit interactive. It is one of the smaller courses. We anticipate an hour, but there's a chance it may go a little bit shorter, but we'll get you what we can. One of the things we always talk about at the very beginning is we want to make sure that we're extremely accessible. This not only means myself, but also the NDA and Lindsay. So if during the course or after the course, if there's something you feel that you want to try and get clarified, you want some additional information, you want to get into a little more in-depth conversations about, we highly encourage for you to reach out, let us know. We're really good about getting back to everybody and their questions. I'm reachable if you want to ask myself, or we can get somebody who knows better than I do and try and get any and all that information brought to you or answered or get you hooked up. So as you are aware, this is Demolition Foundation's webinar for job cost tracking. As I look, kind of my computer setup isn't the greatest, so I'll kind of be looking to the right a little bit at my screen, and as well as getting back to you. Hopefully all that works out. So I appreciate all of those who have joined. I'm excited that we have a good audience and that people are jumping in. So with that, we'll go ahead and get started. So the webinar objectives, as I said, we condensed a little bit. So in this next hour, we're going to look to try and identify 6 types of costs on a project. We're going to try and define the difference and help you better understand what is the difference between direct and indirect costs, and then explain the importance of cost tracking to the life cycle of the project and the company. So we'll get into more details for each portions of these. As Lindsay had indicated, we'll go ahead and try and bring up some questions and make it a little more interactive. So I highly encourage some questions as we go through this. Just as if we were in the live presentation, the more questions that are brought up and things that are asked about tend to generate a better presentation because I assure you that one question from any one of you is a question that somebody else has had during, the course and time of their career, and it's always great to share the experiences and the thoughts and opinions. So, the definitions and principles. Costs. Obviously, when we look at a project, we try and look at it and say there's two basic portions of it. We have a job, it costs money to do, and the intent behind any project that we do is that we get paid more money than what we've spent at the end of the job. The big question is how do we keep track of all those monies and what we spent? In some of the other courses, the big question from the estimator is, he says, well, I had money in it when I bid the job. Now the question is how are those costs and those items being tracked so that we can identify what is and what is not associated with the project, and how those get tracked and how those will try and help you to bid projects in the future. We've said in the past on various things that everything is kind of a circle. And this is obviously a very important item because this helps you generate what items will cost for other projects, and then also provides information for your estimators, your project managers, and quite frankly, the owner as well. Not just the owner of your company, but the owner of any project, so that you can establish that relationship and hopefully have some negotiation ability with them in the future. So what are the different categories in a cost item on a project? Typically, you have an indirect cost, you have a direct cost, you'll have an accrued cost, and then obviously the big one, which is going to be scrap and salvage in our business. The hard part about this is either considered a negative cost or an income, and these are items in which you're going to have to talk to your accounting department or figure out what the standard is for your company and how it is that they want to go ahead and approach those items in any situation. So the best thing during this course we talk about is to try and understand each one of these and to obviously try and manage those as well. So is it direct or an indirect cost? Okay. Some items may be classified as direct or indirect by different companies. So the question is, where do you classify some of the following? I want to step back just a little bit and try and explain a little bit of what we consider direct and indirect. Typically, a very simple definition of direct is costs, as you're probably well aware, are ones that you would think are directly relatable or are applicable straight to the project itself. Indirect are those items that might be considered support, or what a lot of times people consider overhead. So the question is where do you divide those, and where does it go against the job and where does it not go against the job? Because those have a direct effect on the calculation that you're going to use later for your estimating program of saying, hey, what is our overhead costs? Because your overheads may be substantially higher and then the percentage raises, or you may end up with a lower overhead because you apply all those costs directly to the job. So the question is, where do you classify your safety? We have many companies that look at safety as saying, hey, that's directly related to any particular project, but then where's the corporate safety portion of it? The job site office. Is that job site office something that you own and saying, hey, the company or the project should be charged for it? Or is it something that doesn't even have a cost? Permits. Are these permits something that is job specific related, or is this something that allows you to work in that particular area? And then licensing. Licensing is definitely a question. Where do you categorize this? If you have multiple projects and you're licensing, does that mean that it goes to a specific job, or does it become part of the overhead and the cost items associated with the overhead on your overall company? If you go to a different state, does it then become a cost specific to that particular project in the state, or do you maintain that licensing and now it becomes an overhead item? These are all different things that you need to try and take a look at and try and make a determination. So, accrued costs. What is an accrued cost? Typically, in a very basic manner, an accrued cost is a cost that you don't incur immediately to the job, and that may not be accounted for, but is usually what we try and consider an invoiced cost. So the question is when you're tracking the costs on your job, you want to try and look at an accrued cost and try and figure out, as you're looking at the project, where you stand on those costs. So you can see on here examples of the accrued costs, maybe a trucking company, a crane service, or subcontracts. Typically, to try and walk through these, what you're trying to look at is if you have trucking, which is probably one of our biggest items in our business, is if you have 10 trucks running for the day and those are burning each day or 5 days a week, you have what's called an accrued cost. So when you go to start costing your job, how do you apply those trucking costs that are going to come in against what you're going to have for the invoice? Now, I know that everybody's company is a lot more sophisticated than the ones I've worked with and currently work for. So I'm sure when you get your invoices, they come in exactly on time and exactly as they should be, and you never have anything that we call lagging out there. So for those of you who do have a little bit of a problem like we do, and you end up getting an invoice from your trucking company 6 months after the project is over, do you want to account for that cost when that invoice comes in so you can bill it against the job? Or do you want to try and accrue the costs and apply it, as it shows in the second bullet here, as the services are rendered? So each day you can account for those trucks and saying, hey, I have the trucks, but you have to kind of put in a general guesstimate or an estimate, maybe based on the tickets that you've received, and then use those to start applying against the project itself. These are called accrued costs. This is the same thing with a subcontract or even the crane service or any other services that you have. You know, we have the collection of freons, we have the disposal is probably one of the biggest items that are going to come in. And not typically on a landfill because they want their money right away, as everybody knows, but the invoicing portion of it, it's very difficult to manage what the job is going to do and whether or not you did well if you don't manage these costs immediately, because if you forget about them, then the job takes a substantial hit later on. You've accounted with your financial institution that you've done well on the project and you're not taking a hit, and then all of a sudden these late invoices come in and you have to account for them. So these are all called accrued costs that in typical fashion we would suggest that you account for these immediately as they come in as a general estimate, and then obviously make the adjustments as the final invoices come in. It's not an exact science, but it gives you a general idea of where the job is going to be, and you can generally manage it within a few percentage points. So scrap and salvage costs. Typically, depending on your deal with your accounting system, is how it has to go and where it's accounted for and how it's accounted for. It's always been a question as to whether or not the income from scrap is considered income or if it's considered a negative against the project itself. And either way, you have to be able to manage those items as they come in. The other portion of it is how do you manage those costs against the job? So based upon what's coming in and where those are applied depends on how the project is going to do. And in many cases, you have to deal with those materials and when they're coming in. Now, what we have on here is we have the scrap, and typically you look at that and you say, okay, well, I know what I have. But in many cases, probably one of the biggest items to try and balance out your job is when we try to have sales of materials or items. And those sales might be, hey, I'm selling a used transformer, I have electrical equipment, or you might have a tank that you're able to sell. And then this becomes a little more difficult because now you have to determine what the cost is going to be to pull that out and what your net return is on it. So typically a scrap company will pay you fairly quickly for your materials and you can manage that against it, but you have to also understand that hits the bottom line of the project. So you need to talk to your accounting department, and depending on whether it's considered an income, which then all of a sudden becomes questionable about what is the tax implications on those, or whether it's just a negative offset against the project. So in either way, you need to try and track those as well. It's obviously that the biggest thing is that you have an estimate against a budgeted item, and you need to manage each one of those to try and find out what that grading is, where the market is, and where you stand, and how you're going to do. So that's probably the closest you're going to get on the scrap portion of it, and obviously it'll vary on a month-to-month basis, and just try and keep track of everything that you have. So income. So the income is revenue earned by the job. Obviously, this is where the bottom line comes in, is to how much money comes in against how much money is going to go out. So what are the categories of income? There's not too many to really choose from, other than the fact that you have the contract payment. But the contract payment, as you're well aware in our business, is not necessarily the full amount of what the job costs actually are. So we have the scrap and the salvage. And the reason we look at it under scrap and salvage is because in many cases in our business, as I had said previously, we do have sales of materials. So we need to look at those as far as income. Typically, we haven't found much more beyond that generates an income. So we want to try and track these, and those are considered revenue against anything that we try and do on the project itself. So what are the categories of costs? We try and break these down into basically 6 types that are typical for what we do. Now, I'm not saying that there's not additional categories. We have cost items, and these are broken down into much more trackable items depending on your company and how you want to look at it. But typically what we find in an overall project for these items creates the main portion of what you have here. And these main items then can get broken down into subcategories that allows you to track them a little bit further. So perfect example is the labor portion of it. On the labor portion, we know that this is a specific cost. But under the labor portions, you may look at trying to break these down a little bit further into which categories they are. Are they associated with building A, building B? Is it associated with the labor with the concrete removal? Is it above grade concrete or is it below grade concrete? So these are all the items that you want to try and break each one of those down and where each one of those items are going to go to. Equipment and small tools. This is obviously huge. So the equipment portion is a breakdown, and you want to go into a little bit of further detail and find out, okay, is this equipment? Obviously the big one is it rented or is it owned? Because we need to know how much utilization we're having on each one. And obviously on the equipment rented, it becomes a big issue, and you're probably asking why. And that's because equipment that is rented is broken down on cost based on the number of hours that are used. So we typically go in and saying, hey, what is the negotiated hours we got per month, per week, per day? And if you look at it, you'll understand that a lot of times, on average, you're in the neighborhood of what, 160, 170, depends on the deal that you negotiate. So you got to be able to look at not just what your monthly billings are going to be and when those invoices are coming in, or you're doing the accrued portion on those rentals, but you want to be able to look at it and say, hey, how many hours am I burning on that particular piece of equipment, so that you can associate the cost for the invoice that you know that's going to come in from the rental company. And if the rental company doesn't look at the hours on your machine on a monthly basis, you can bet that if you've gone over at the end of the project when you demobilize that piece of equipment, that all of a sudden you're going to get a late building that's going to take a pretty big hit on your project. Small tools, obviously you need to try and figure that. But the big question falls on the small tools also. A lot of times in estimates, what I've done in the past with multiple companies is that you have a small tool allowance built into your labor or hourly rate. So the question becomes, do those small tools then get billed to your project? Are those small tools then owned by that project, or are they then billed out in 50% fashion, and then the rest of it is billed to different projects that they might go to? Subcontracts, usually pretty straightforward. Manage each one of your contractors. Materials, These are items that you bring in. These are usually pretty straightforward as long as the quantities are correct. This is definitely one of the ones for an accrued cost, because you know that that invoice is coming in a little bit later. So you want to manage the quantities and take a look at those and make sure that those costs balance out against your quantities. And then dump fees and the trucking. Obviously, dump fees is a specific cost. Again, these are accrued items, and the trucking is probably one of the most difficult, especially when you have to call them up and ask them to start sending in those invoices so that you can try and see exactly where you stand. And then finally, the scrap and salvage portion of it, which is needed so that you can try and offset those overall costs, okay? So the labor. Obviously, labor is a very big item. It's the cost per hour times the number of hours to be charged, okay? How do you calculate that out? Well, you calculate those hourly costs out by what's your base rate, and then obviously you have the fringes, we got to pay the taxes, you have the insurance portion to it, and then you have the per diem. So the question is on the per diem, is that something that's included into your base rates? Do they get each time? Are these items where the per diem doesn't apply? Have we talked about what the travel time might be associated with those costs? These are items that all need to be calculated into your hourly rate or figured out how it's going to be billed back to your job. This is where you usually work with your payroll department. You're trying to take a look at the overall payroll rather than maybe just necessarily tracking the costs themselves. And if that's the case, obviously you need to look at where your manpower is and what they're doing. And then adjustments for overtime. That's probably one of the little more difficult items, because typically on the fringes and insurance and the per diems, those don't change or don't come to time and a half or double time when you're working with this. It is a percentage portion thereof. So it's not strictly 1.5 or 2 times, and you need again to work with your payroll department so you can manage those hours and then take those hours against your costs and make sure that those are being tracked correctly. The other big thing is it's not just a cost item. We need to understand that these costs are not just simply a way of looking at a project and saying, how much did the job spend? How much did I make? How much did I lose? Because those hours are directly related to the quantity and the items and the categories that you're working on. Why is this important? Well, the big thing is that if you know how much labor time it takes to remove a particular portion of the building, how much equipment is associated with it, the next time the estimate comes around, you're able to take those hours and directly translate those costs into the items that you're working on. We've all worked in this business and sit here and say, oh, well, you know, foundation removal, that could run you $35 a cubic yard. Or I can remove slab and smaller materials for, you know, $10 a yard, or, you know, so many dollars per square foot. And all those costs and those unit rate item guesstimates that we put together are all based on these particular items. Management hours. This is a very big one and has to be questioned about which one is a direct cost and which one is going to be an indirect cost. Does the management cost when they come out to your job start costing you? Or is it when they're on the site or when they're doing work anywhere? So I want to bring up one of the items. So this is an item for discussion we've talked about and stuff. Direct or indirect costs. We have these items listed here, and I'd like your opinion as to whether or not you think the management costs of these are direct or indirect. I think, Lindsay, I think you may be there and we can put those up. So if you can answer these on your form, I'd like to get your opinions, and then maybe we can talk about them really quick. Is the project manager a direct or an indirect cost on your project? Is the project manager while he's on site a direct cost or an indirect cost? So when he pulls up and he's there, or heck, maybe he's got to drive 4 hours to get to your job site, and he's there to help out and talk to the client about a change order that might occur. Is his time now directly billed to your job, or is it considered overhead? And then the question is your corporate company safety officer a direct cost or an indirect cost? Is the corporate safety officer going to be billing your job directly, or is he considered an indirect cost and he's there to support your project and not have it billed to it? So if you all could just choose, it'd be interesting to see. I think everybody can share as to what that is going to be.
Greg, we'll give it just another 20 seconds. We have a few people who haven't had a chance to vote yet. So we'll give it, about another 15 seconds and then I'll close the poll.
That sounds perfect. So once she closes the poll, it'll work out pretty well. You kind of have an idea. I think everybody probably looks at it and says, hey, I know exactly what this is, and this is specifically what it is. I think this gives you a pretty good insight as to what everybody else is thinking also, and when they look at their projects. So it's pretty interesting as to what everybody is thinking. You can see, is a project manager a direct cost or an indirect cost? So we look at it as an indirect. So when the project manager comes on your job, it is a big question as to whether or not he's going to charge you or not. So obviously you can see here that 20% of the people know that they're going to end up getting charged for his time, while 81% think that it should be an indirect, that he should be part of the overhead. But if he's on site, then it changes very drastically in saying, hey, he should charge your job for the time that he's on site. But still, almost 40% of you still believe that it should be an indirect cost. So you need to try and find out and manage your project, okay? And is the corporate safety officer a direct or an indirect cost? Well, I've had it go both ways. Typically what I find is that the corporate safety officer, if he's working on your project and he's developing a plan for your project, he's going to end up charging your job for those particular hours and those particular times. So, you know, it really depends on the company and what you're doing. And the main reason we bring these up is so that you can kind of question where it is. So very interesting, and appreciate your guys' input on it. Equipment. This is always a great category to talk about costs, okay? So ways to calculate. You have a cost per hour times the time worked. You have a cost per day times the time worked, or time on the job, okay? And how do you calculate the daily or hourly cost? Is it Blue Book? Is it your rental costs? Which one is it? You can calculate out. I have people who do all different kinds of things with their equipment. And a lot of times, quite frankly, it comes down to the bottom line of whether or not it's equipment owned and or whether it's equipment rented. So you need to try and take a look at it and saying, hey, what is going to be our final rates? We have multiple companies that are large enough to where they have their own separate equipment company that rents back to the demolition side. So are those rates negotiable, or are they set rates? And you need to try and find out what those are when you get the project and what you're going to do. So how do you calculate the equipment costs? Well, you're going to look at what the rental rate is from the office, okay? And then what about the additional costs? So fuel, maintenance, and operating costs. So part of the question is when you're running your equipment on the job, everybody knows that if you have the rental that's on there, okay, I'm going to get my monthly rate. But we already talked about real briefly saying, hey, your monthly rate isn't always necessarily what you're going to get, because when you get quoted your monthly rate from your supplier, he's going to give you what it's going to be for an estimated number of hours that it's a regular work week, which is generally typically 40 hours a week, 160 hours a month, depends. We all know that in our business, it is pretty rare that we're going to be working just strict 40 hours a week. So as soon as we go to our 5/10s and we're accounting for an extra 10 hours a week, 40 hours a month, we've got an additional week's worth of pay. The big question is, what's the additional hours worth? Do they go back and say, hey, my monthly charge is based on what the equipment is divided by those hours for the monthly rate? Is it the hourly charge based on the daily hourly rate? Is it based on the weekly? All you know is that you're going to end up getting an invoice. That invoice is going to be coming in later, and you need to account for those particular hours. And then obviously the fuel portion of it. We need to know what it is, but how are you dividing out those fuels between, say, the different equipment or what people are using or not using? Where is it coming in? So each ticket that's coming in, we got to try and take a look at and see what that delivery is. And then maintenance. You know, one of the big question is should maintenance be something that's included in your equipment rate and you shouldn't have to pay for it separate? And especially if it's your own maintenance truck that comes in and does work, does he get to charge your job directly, or is it part of the rate from which, you know, your company's charging you? So I have another question for you. So if you have a company-owned equipment, okay, and you blow an engine on that particular job, okay, or you cause or create body damage, okay, what is that charged to? Is that charged to your job? Is it charged to the overall company? Okay, and then on rental equipment, if you damage the rental equipment or something happens to it, is it charged directly to the job, or is the company paying for that as an overhead? And then what's the cost for the maintenance? If you got to do an oil change, you got to do your air filters, you got to flush the system, what's it going to be? And then the question of demobilization. Here's a big question. If you have a rented piece of equipment, are you going to pay demobilization? I would say yes. What if it's your own piece of equipment? If it's a company-owned piece of equipment and it's being demobilized and it goes to another job site, does your job get charged the mobilization or the demobilization, or should you not have to pay that because it's going directly to the other job? So I'd be curious if you have any questions or somebody has a question they might want to answer.
All right, thank you, Greg. We've got Fernando Lopez has raised his hand, so we're going to unmute his mic. All right, Fernando, you may need to unmute on your end, but you are live from our side.
Fernando, try and push the unmute. There you go.
Okay.
Question. Good. How are you?
Very good, Greg. Thank you for presenting. This is very, very insightful. Well, on the company-owned equipment, the cost of a blown engine or body damage, it goes directly to the company cost. It doesn't hit the job because you own the equipment. I'd like to do though, for those equipments that we own, I like to charge into the job like a rental type of item.
Yep.
So it becomes a profit center, and specifically in those circumstances where there is a damage or anything that is major repair, it goes there. That will be the way we treat it.
Okay. I think that's a great point. And what's interesting is in previous classes where we've taught this, I've had multiple people that come back and saying, if you blow the engine on the project itself, that project has to pay for it. So it's kind of interesting in how you want to set your company policy, because the company itself doesn't want to take it. Definitely the rental rates or setting up a separate company works out really well. And I've had multiple people get a little frustrated because they're saying, hey, if we own it, we should pay a lot less than what the rental rates are. So we really just need to set it up internally. And it's interesting because each company has different requirements.
You're right, specifically as well with either owned or rental, is when you have a specific clause in the contract, either as you own the equipment or not, you can cover those instances as well. Yes. to cover risk, including same thing with the mobilization, because someone needs to pay that. A big crane, it doesn't get there very easy.
Yes, so sir.
It needs to be part of the cost as well.
Yeah, nope, I definitely agree. And the big question, which has always been kind of wondering, is where people talk about the demobilization. So if you move your equipment that's owned from your site A and it gets moved to site B, should site B basically pay mobilization costs, therefore site A should not have to pay demobilization?
Yeah.
So it's just a question of what people do. So I appreciate it. Thank you, Fernando. Lindsay, do you know if we have any other questions thrown up?
Thank Thank you. Yeah, if anyone else would like to share, please go ahead and raise your hand. None others at this time, but I know we've got some discussion questions at the end.
All right, awesome. Fernando, thank you. I appreciate it. Again, I think the input, or if you guys have any questions or anything, please jump in. I think these are good. It gives you a little insight as to who's doing what. So as I had said on this, it's a great question. It's really fun when we do these in a bigger setting generally, because the looks on people's faces and some of the superintendents who come back get a little frustrated about what's charged to them and what isn't. So it's always good to try and understand the company policy ahead of time and understand. The one thing I will jump in really quickly for too is, even though it's company and especially for rented equipment, when it comes to costs, to try and minimize your exposure, is we always recommend that you do a full inspection and take pictures of equipment as it comes in, as well as when it leaves the site. There's been multiple times where it is left or it goes to another job or something else, and then something happens or something has happened and you end up getting stuck with that bill. So always be aware of the conditions of when it comes in and when it goes out, and then also try and take a look at the maintenance records. You don't want to get hit with something you're not supposed to. And whether that's your own company or whether it's a rental, always a very good idea. So subcontractors, okay? Generally, these are on accrued costs. And the main reason they're on accrued costs is because, I don't know if, you're like me, but all my subcontractors have a tendency to either get me a bill as soon as they're walking off the job and I'm good to go, or, 90 days, 180 days, or when they seem to get around to it, they send me a bill. And by then I've forgotten about it and the job takes a hit, or even worse, which your accounting guy chases you with his letter opener, is when you end up getting a bill 6 months later and he's now asked to reopen the project after it's been closed out, and then you got to figure out how to charge against it and then come back in. So very, very frustrating, and does cause probably a bit of trouble, especially when the bank auditors are sitting in the room shaking their heads. So anyways, try and keep track of these, okay? And then obviously fees can be calculated in two ways. You have a prorate or you have a lump sum. Prorate, just to confirm, basically if 50% of the work is done, then you're going to charge out 50% of the work. Pretty much what we do with our owners is pretty much what the subcontractor is going to end up doing with you, okay? So materials, they're charges that are brought to the job, not when the invoice is received. And again, the main reason for this is twofold. One, because the invoicing process, as I'd said earlier, can come in quite a bit later. The other reason this is done is because you want to build this off of the actual quantities and the materials that are actually delivered and used at the job. If you wait for the invoice, then it's much more difficult for you to try and track the quantities that were actually used against the quantities that were potentially estimated. If you're under, that allows you to say, hey, I have excess funds and excess monies that I can use and move somewhere else or collect on. Or the simple fact is that if you've gone way over, you know that you're going to have a problem and try and take a look at it. And finally, the other thing is that a lot of times with an owner, he's not going to pay you until you have those materials delivered to the job. So you need to be able to account for those, and you want to be able to charge the owner, so you want to manage those items as they come in. Additional costs to consider for small tools and PPE. These are ones where obviously, someone in your office is accounting for every single thing that comes in and goes out, and you need to determine how these are going to be billed against your job and try and manage those and make sure that you have an accounting system that, follows those small tools. So dump fees and trucking, always probably one of the most difficult items in the entire process, especially as we're getting just such a heavy burden of loads that are going out. And you want to be able to charge these as the costs are incurred, okay, not when the invoice is received. I've had multiple times where literally I've had a trucking invoice come in 6 months late, and we forgot about it. It becomes a very difficult task and quite expensive. So we want to make sure and account for each one of those. And when we're using an outside trucker, be aware of how and when they charge. So the how is probably one of the biggest things. If you can get anything on a per load basis, obviously a lot easier to deal with. But if you're doing it on an hourly basis, the big question is how you're going to take those tickets and then manage those, putting into the cost codes against that. The other question is we have had trucking times before where they actually charge an overtime or a premium time. And probably the biggest thing for us in our business, more than anything else, is the standby time. Even if you have a per load rate, which can be done by your roll-off bins, or it can be done per load, whatever it is. If they're held up at the gate and then all of a sudden those costs are getting greater, it's not necessarily just per load. So make sure and take a look at the tickets, because by the time the invoice comes in and you found out that your trucking costs have increased by 30%, it makes a very big difference. Okay. The scrap and the salvage. Okay. This is obviously an income that makes a big difference, but tracked as at a cost. Okay. And the main reason this is tracked is obviously it's to prevent theft, and whether it's tracked as a negative cost, and important to factor all costs related to the scrap. So basically at the end of the day, what you're looking at is trying to decipher whether or not you're going to use your own trucking, or whether or not the scrapyard has set up the trucking. Does that trucking come as a separate bill that comes in directly to you, or does it come off the net return of the scrap pricing itself? So if you're quoted out at $200 a ton, but we know that the trucking cost is $20 per ton, are you getting the 180, or are you going to get charged at $400 a load and you're getting the full scrap price? And if you're getting charged that, is it a bill or an invoice that comes directly to you, or is it ending up being deducted from your scrap return? These are all significant items for which you have to look at. And the big thing to continuously understand is the materials going directly to one scrapyard, or do you have the ferrous going to one yard, the non-ferrous going to another yard? Do you have items that are going to an end user? Are you going directly to the mill? And then God forbid that you're playing with the rail. So if you're dealing with the rail and then you have the invoices that are coming in and you're starting to deal with any demurrage associated with the rail cars or anything else, these are all items that you are going to really, really need to track and figure out where those costs are. Are those costs directly related to the project? Are they directly related to your company because they screwed up the ordering of the cars, or you didn't get enough cars? These are all different things that you're going to have to try and manage and see what you're going to deal with. And probably one of the most difficult things when it comes to the scrap portion of it is that we all know that the prices changed on a daily and a monthly basis. You know, did the prices change in the middle of you doing your work and delivery of the items, or for the first 10 days of the month, you don't even know what your scrap price is, okay? So it's important to try and track each one of these and make sure it goes against the job accordingly, okay? Putting it all together, okay? The real world uses of cost tracking, okay? The big thing on this is, as we had talked about when we're going through this, is to try and utilize this. Everything that we do in our business is kind of on a circular basis. However, we generally don't, or at least on very rare occasions, do we have the opportunity to work in the entire circle portion of it. I'm going to end up showing you another slide here, what that really means and how it works. But when it comes to cost tracking, the reason it's important is not just to sit here and say, hey, did we make money or not make money on a project? We all hope to make money, and if everything goes right or the scrap market goes really high and the job ended up making, a 40% profit, okay? Did the job really make the money that it should have made? And the question is on that is that if the estimate was mismanaged, or that something was left out, or the quantities were missed, or let's just say we talk about in some of the other classes, we talk about the concrete portion of it. So if we've estimated the concrete and we know what effort it takes to try and break up and remove 3,000 PSI concrete, and we end up finding out that it's 8,000 PSI and we're trying to break through it, and the effort it takes was twice as much as what it should be, but because the scrap market happened to go up, or we sold some equipment on the job that we didn't anticipate. The job ended up making, a really good margin. Is it important that you take the information and potentially go back for a change order still, even though the job did really well? Absolutely. We need to try and take a look at what those efforts are in comparison to the costs and then break those items down so that we can try and take a look at each one of these. So we need to compare the production rates and the costs of the estimate on a task-by-task basis. And then we need to compare their percentage complete to the dollars spent. This is not always a true comparison, but if you're doing a lot of labor work in a particular area or item, it's actually a very good way of trying to track where it is that you're at, because this is an item from which is mostly dollars spent against the efforts put in. So it is a very good indicator that if you're 50% done and you spent 50% of the money, then you're on a very good track, okay? And then you want to estimate the anticipated cost to complete the job from any point within the process. This is a very, very good indicator and extremely important about where it is that you're going on the project, where you might fall short, and kind of gives you those emergency blinking lights of everything's good, or if we're running into problems, or it's a flag to try and tell you saying, hey, was it a missed estimate, or is there a change condition within the project, okay? It's not always that obvious that it's right in front of you and say, hey, this is immediately changed. So we want to be able to try and take a look at those items. Like I said, just on the concrete, why aren't I getting the production? I'm spending more than I should. It's a good indication for you to try and figure out what it is that you're looking for and why it's happening, okay? We're real world uses of cost tracking, okay? We want to identify additional management time needed on a specific job. We had talked earlier about that portion, about where that management portion is. So if we need additional management on the job to try and control those costs, or that it's the client that's slowing us up, do we have those costs to try and use and provide to the manager to show the client and then utilize it as a tool to support your position and what the company can do for potential change orders and items that are going on, okay? It also gives a cleaner indication as to where you're going to stand on the project and why it is or isn't doing well, okay? And then you want to use it to help prepare monthly billings, okay? Cost versus schedule of values. This is obviously huge. You want to try and be able to take a look at it, because you always want to be in the positive, as we always know. We don't want to be in the rears on it. So if we're able to try and look at it, you use these percentages and you break these dollar costs up. Doing the cost tracking is extremely important when it comes to trying to say, hey, where am I going to put those dollars and how am I going to bill against these, and where are my biggest costs? It's one thing to say, hey, I can hold out or paid when paid for a subcontract or material supplies or various items, but it's an impossibility for the labor. We all know that we have to pay it on a weekly basis, so we need to try and take a look at what these are, cost schedule versus what we've expended, okay? So as I'd said, in the overall loop of items, this is one of the things you want to try and look at. We know that we have the estimators who start off, and the estimator has a tool that he utilizes based upon the production and the cost of the previous project. So you want to be able to get that feedback. That then goes to the project managers, okay, who pass it on to the upper management, who goes to the field supervision. And the field supervision, it's critical that that information that is happening in the field then turn around and get fed back to the estimators. Because if the estimators don't have the real world figures from which to work from, then they will constantly make the same mistakes that are going on, and then the field supervisors end up with the same results each and every time. And trading dollars isn't the way to try and manage the project. So we need to be able to take each one of those and use this. It's a constant learning tool. It's a management tool to help you with change orders. It is an extreme indicator as to where you are, what your quantities are, and what it is that you're doing. And obviously try and track to see if there's any issues with suppliers, quantities, problems with theft, anything else that's going on, not just from internally, but obviously externally as well. So part of a discussion. I'd like to try and raise hands, and if you can, please jump in if you would like. If not, don't worry about it as well. So the discussion is, do job costs equal percent complete? Okay, I'd be curious as to what people think about that. Okay, does the percent complete versus job cost to date determine profitability? So the big question is if that, our job costs are only at 70% or at, 700,000 and the percent complete is on $1 million job is 80%. Does that mean that the job is profitable? Okay. Should a pre-award costs be charged to the job? So one of the big questions is that you usually put a job number or a bidding number against the job, and you spent the estimator's time and you spent a project manager's time, and you took the superintendent and looked at the job, and you all spent that effort going out, and then you actually captured and won the job. Should those costs that were incurred during that time then go against that project? Should an equipment purchase be charged to the job? Well, it depends. If it's a small tool, should it? What if you need to try and buy a full-size excavator? Should the entire equipment purchase be charged against the job? Should it not be charged at all and it just shows up? Be curious as to what you guys' thoughts are and if you have an opinion. Lindsay, any hands raised by chance?
Thanks, Greg. So go ahead and raise your hands if you'd like to share. We probably have time for 1 or 2 folks to share. We do have a couple of questions in the Q&A box that we'll want to get to before the end of the hour as well.
Okay.
We do have 1 hand raised. So
Awesome.
Back to Fernando from earlier. He
Awesome.
is super excited to share again, and I love that. So Fernando, you are unmuted on our end. Go right ahead.
Hey, hi, Greg again.
Hey.
Well, as far as the job costs equal percentage complete, not necessarily, because if we follow the formula of the actual cost divided by the estimated cost, we may have a percentage, but one item alone may imply one delivery of 1 month or 2, and the project could be 6 months long, and then many other factors. That's not necessarily the truth. So the answer is no.
Yep, I agree with you. Not by a long shot.
Does percentage complete versus job cost today determine profitability? Absolutely not, because we may be at 1/3 to complete the job, everything good, profitability and whatnot, and suddenly someone drops the ball and all the profitability goes away because one of those things happen, and then we need to be careful on that one.
Absolutely. I've had very late invoices come in or undetermined costs, and one of the big things that catch us is potentially a back charge from potential damage that nobody ever said anything about. So these are definitely items to be aware of.
Should pre-award costs be charged to the job? It depends, but in my experience, what I have seen, sometimes pre-award costs sometimes don't come into fruition, and then the company ends up just eating the cost. But if awarded in the cost, we may include to one portion of that or the whole pre-construction cost included as part of the job cost.
Yeah, and I would say this is definitely an item that is, each individual company. I've had it to where those costs are tracked and, it's charged against, and then it turns around and hits the job. And I've also had others where they know that they consider it part of an overhead to try and capture work. So it's just something to try and look at as you're tracking your project and be aware of.
Should an equipment purchase be charged to the job? Also, it depends. Sometimes a new equipment is required and it gets so much bit. A crusher or some equipment gets so damaged just to deliver what is needed that there is no use to use it again. It depends, really. But
Yep.
That will be my answer.
Nope, and I appreciate it. Thank you very much for throwing in. I think on the equipment purchase, I think what it is it's a question for those who are in the field and have to manage this. Sometimes it's put in there to where 50% of the cost was into the bid itself. So you just really need to try and take a look at, was it included in your job? If it wasn't, should it be, absorbed? Maybe depending on where the job is at. you talk to your accounting department and see what's going on. But, I think it's a question of whether or not it was anticipated, needed, and different situations. So these are really items and kind of questions that don't have a specific answer other than what your company does. But they're brought up to make sure that, as you are in the field and working these items, that the question is brought up. We found that trying to go in blindly and bitching and moaning about it after the fact, it's what we all do, but it's kind of nice to be able to know a little bit ahead of time, and forewarned is forearmed, as they say. So I think with that, I think we're down to just questions at this point. So final thoughts and questions. Lindsay, I don't know, we can throw these up here. We do want to throw out really quick before we finalize. We do have our foundations of management, which are the full classes where we get into much more detail. We have the chance for a lot more interaction. It's a great opportunity to get together. We highly recommend and try and push you to consider taking these. There is a certificate program at the end of this, and be well worth your time. These are up here for right now, but obviously they're on our website, and you can contact Lindsay or the NDA office at any point in time to try and get additional information on any one of these. So we'll leave it to questions. I think we're okay on time and just have a couple more minutes and we should be able to answer those.
Yeah. So Greg, our first question, hold on, we've got a little bit of feedback there. All right, so our first question is, how do you specifically like to deal with the scrap and salvage income? Do you like to do it as an income or as a negative cost, and why?
Typically what happens is I break it up as an income. The income then goes as an item against the project itself. The main reason why is because it can be handled, at least per the accounting department. It's managed as a separate item. I can't tell you how to report any of those purchases or items, but it is managed to me as an income against the project, and it comes in and then it's designated as each one of those tickets for a particular job. I've had fewer companies kind of manage as a negative, and the main reason why is because most of the accounting software out there, and speaking with the accountants who deal with it, have a very hard time dealing it as a negative or reduced item cost. It just seems like the Quicken or the books or any of those items that come in don't manage a negative portion as it's coming in. So there is no right or wrong answer. It just kind of depends on how you want to manage it, but I found that it's usually a little easier at having it managed as an income. Okay, hopefully that helped.
Thanks. Our next question is, where do you book the depreciation of the machine if you own it? Would you call it an indirect cost, or would it go to the project?
So that's a good question. It's probably more along the accounting side of it, but the depreciation at the end of the day, at least I have found, is not booked as a direct cost. It is an indirect cost, and it kind of depends a little bit. If you have a separate equipment company, then it would probably go as an indirect cost because your equipment would then be managed out as, having a certain rental rate, and it goes as a depreciation to balance out that rental rate. So typically what happens is over time, the depreciation and the value of the equipment allow it to be rented back to the job at a lower rate or cost. And then what happens is that the depreciation then accounts for part of a overall cost item. I know it sounds kind of strange, even though it's a depreciation, a cost item against the income of the company. If you don't have a separate company set up, generally what happens is the depreciation becomes part of the overhead against, or the overhead against the company. It's like an administrative cost. So it's typically taken into the overall as it's shared against the company. Typically what you want to do is try and get the equipment set up as a separate entity. because then what happens is that the monthly payments on it become a overhead and a burden of cost to the overall company rather than having it shared to the individual projects. So what happens is that instead of truly pricing your equipment out on the job as it should be, it's priced out onto the job just to try and generate an income. And then what happens is that income becomes a taxable item against the company. So if you can set it up as a separate entity on the equipment, generally what happens is you can run that company as a break even or many a times as a negative. And then what happens is when you're bidding the job, then you can manage your profitability and decide how aggressive you want to get or not get, and not have the costs of the equipment try and make the payments back for what you're using as an overhead. It's kind of complicated a little bit, and I'm more than happy to talk a little bit more about it. I'm certainly not a CPA or an accountant by any means, and that's something you should talk to your tax person about. But hopefully that gave a little bit of insight to try and give you an idea of sometimes it's a better way to manage it. But again, you know, this is based on past experiences running across and who I've worked with. And each individual company should do their own thing and what's right for them. But I'd love to sit down and talk with you anytime about it.
Thanks, Greg.
You bet.
I know that we are a little bit past the hour, but we have 2 more questions in the Q&A box. Greg, as long as you're able to stay on, we will stay
Absolutely.
on those.
Absolutely.
Wonderful. So our next question is, where do pre-award costs go if you're not awarded the job?
Unfortunately, that is definitely considered an overhead. But the main reason we talk about that is it is a good idea to be able to use those and track those as an item for the monies that you're spending on those pre-awards. You need to try and figure out how much efforts and those costs that you're putting towards trying to get the awards to see what percentages that you are bringing in. So there's not much you're going to be able to do about it, but I think what it does is at the end is it allows you to sit here and say, okay, am I spending a lot of money on things that I'm not getting and it's not worth my time? Or if as a percentage, do I get a lot more government work and I should try and push my costs more towards that? Or am I more towards the private sector and I should maybe try and focus more on that as a percentage of wins against the costs that you're expending? So they do go to overhead, absolutely, but it also is a nice way to be able to track those monies to find out where they're most being spent and where you're getting your biggest bang for your buck. Okay.
Great. And our question in here is, if you were to get fined during a project, how would that cost be tracked?
Man, try and get your superintendent to pay for it directly out of his own pocket. Aside from that, if you get fined during the course of the project, it really kind of depends, okay? First and foremost, I will tell you, I'm not going to give you legal advice in any way, shape, or form, and so we can't be held accountable for that personally or through the NDA. However, when a situation like this occurs, I'm going to tell you that if you accept it very, very quickly on a fine, yes, you can put it towards the job. However, a fine means that you're generally going to have a citation. And if you get a citation, it's probably one of the worst things in the world you can get, and the fine itself doesn't mean anything, okay? The fine itself is usually pretty minimal. It is having the record or having the citation on your record that creates much more of a problem. I would say it definitely goes against the job as a direct cost. However, I would also consider then looking at it saying, hey, if you need to fight it, if you need to bring an attorney in, I would do everything in my power to try and get it removed or held up or try and keep it off your record and keep what you can. And those, depending on the time and the length as to what's probably most cost effective for your company, those are generally going to be considered, unfortunately, as an overhead cost, because you'll want to close out the project and then you'll end up burning those costs against your overhead. It's kind of a cost of doing business. However, if the job remains open, then I would put those costs against the job. It's just that these are legal processes many a times that are held up for a long period of time, and your accounting and your auditors and your bank don't want to see that the job is left open for that long. The sooner you can close it out, the sooner you can either show the profit or the loss or whatever it is and get it off your books and finalize those portions. So hopefully that gave you a little bit of insight. Again, any of these questions or anything, I'm happy to answer or try and go through any portions of that. Okay.
All right. Thank you so much, Greg. Since we are a little bit over the top of the hour, we're going to go ahead and wrap up. But thank you all for being here and participating, especially with our more interactive portions of this. It was great to be able to have a little bit of feedback from the audience, especially in this virtual setting. When you do close out of the webinar today, you'll be redirected to our brief evaluation survey. It's going to take about 3 minutes to answer. We would really appreciate it if you could take those couple of minutes and just give us your thoughts about how today's program was. We're always looking for what other things we can be offering to the NDA membership, including other things like this webinar. If you do have any additional questions, please contact us at education@demolitionassociation.com, whether they're questions for the NDA or questions that we can pass along to Greg. Greg, any final comments before we close out?
Nope. The only thing I want to say is it's always appreciated for all those who jumped on. I encourage you to, get more involved in the association. I appreciate your time, and it's been a pleasure. Hopefully, I look forward to seeing everybody soon, and at a minimum, we'll see you at the convention, if not at the board meetings. Thank you, everybody, and please be safe and careful out there during these times, and good luck to you.
All right. Thanks, everyone. Have a great rest of your day.
Thanks.